you are involved in data-driven venture capital. That's a new construct for me. I wasn't familiar with it, but apparently it uses structured and unstructured data to inform your investment decisions. Can you tell me more about that?
Yeah, DDVC, which is data-driven venture capital, I would say is a fairly newer phenomena originating back in 2000, early 2010s. And I would say it's over the last 4 to 5 years has become more prominent and focused in terms of how venture groups, and I would say primarily much earlier focused venture groups, are come to decision making in investments in early stage companies. My focus is primarily companies that are at a product market fit. They're doing about 1.5 million to about 7 million in ARR, annual recurring revenue. DDVC can definitely cater to that because there's a lot of data already established. We can see metrics and understand the health of a company. DDVC is a lot more helpful in an earlier stage in terms of being able to take unstructured data and causing that, being able to scrape various different resources to come up with data that manual work would be a lot more challenging to be able to come up with an unbiased perspective. So DDVC, I'd say there's parts of data-driven venture capital of where you have firms that have in-house data scientists. So if you think about venture capital as a whole, we're investing as an industry into the next era of technology. And if you take a step back, venture capital traditionally hasn't gone line in line in speed-wise with the evolution of technology. We're investing into the next era of technology, but is that evolution of technology reflective of how we operate as an industry? Are we still using spreadsheets? Are we still using analysts to be able to try and understand a market size? How big of an opportunity is it? So if you take those in parallel and you try and do what we want, our objectives to be able to come out with those good investments, best investments in those companies that are transforming data-driven decisions for enterprise, how can that be reflective within our organization with the venture capital firm itself? So what data-driven venture capital does, it takes away the bias. If you can be dedicated for taking away the bias, rather, is it a gut feeling? Is it intuition? And I think some of those things are really important, but we as people, we always have biases. If you think about, we had a deal that was great, and therefore this is going to be a great opportunity. This is a great market for us. Well, that was one deal that could have been a great opportunity that had great operators. Does that mean that because it's in a similar field, there's going to be those parallels? So we automatically have those biases. How can you utilize data-driven venture capital, proprietary tech stacks to be able to take those biases away and give us the ability to be able to make the best decisions possible? With that, I still believe that there's an integral part on the human side of understanding who the management are, which DDVC can actually also enhance that. But as a people person, the people are going to be a driving factor in decision making when I'm investing.
So on that, it sounds like, have you seen that movie Moneyball?
Yes.
So just to make a quick analogy, because I would assume that VCs, private equity, anybody doing any kind of investment, they're always going to be somewhat data driven. But if what I heard in that is, the old style of scouting, recruiting, that's kind of like the current state of VC or PE world. But then the money ball where it's like, hey, we don't care what they look like. We're only looking at the stats. Would that be kind of a good analogy of what you're talking about?
I would say there's correlations there, and there's differentiations as well. If you look at venture firm technology stacks, they have generally been pretty siloed and simplistic without being integrated with each other. That gives the best ability to be able to make the best decision making. With that said, as I mentioned, that is evolving, and it's evolving in a pretty quick manner. The last survey I saw several weeks back saw about 50% of venture firms now have components of DDVC within them. And if you go back to 2020, it was about 3 to 5%. So there is a quick adoption, and specifically emerging managers. If you look at legacy firms that have been around for a while, the adoption of change is a lot more difficult. There's many more emerging managers that are understanding the necessity of having these proprietary tech stacks to be able to leverage data, to be able to make the best decisions. So as you see the adoption happening, some of it is happening within the legacy and traditional venture firms, the household names. A lot of it is happening as well within the emerging managers.